Welcome! Today, we're digging into something huge happening in India's financial world, the new Securities Markets Code. This isn't just a minor tweak, it's a total rewrite of the rulebook for the country's capital markets. And believe me, it was kickstarted by a problem that was just too big to ignore. So let's start with this number, 2,434 crore rupees. Just let that sink in for a second. It's a massive figure, and it's really the key to understanding why this whole legislative overhaul even happened in the first place. So what is that number? Well, it's the size of a massive loan fraud that was reported by a major state-run bank. A deep dive audit found all sorts of irregularities. We're talking about loans to connected parties and even potential evergreening, which is basically a fancy term for using new loans to cover up the fact that old ones are going bad. You see, this headline wasn't just a scandal. It was a huge red flag that the system was under serious strain and desperately needed a modern fix. And that brings us right to our first section. To really get why this new code is such a big deal, you have to understand the problem it's trying to solve. You could say the Indian market was running on an operating system that was decades out of date. This right here was the fundamental question regulators were grappling with. I mean, just think about it. Today's market is all about high-frequency trading, complex financial products, and capital that moves around the globe in a split second. But the legal rulebook? It was a patchwork of laws from completely different eras. So what's the solution? Well, let's take a quick look at what that old, fragmented system looked like, because that's exactly what the new code was designed to replace. For years and years, the market was governed by these three separate foundational laws. You had the SCRA from way back in 1956, the SEBI Act from 92, and the Depositories Act from 96. Each one was created for a specific reason at a specific point in time, and that led to overlapping rules, a ton of confusion, and what experts like to call regulatory friction. It was just clunky. And this is probably the best way to think about it. The new code essentially takes those three different, sometimes conflicting instruction manuals, tosses them out, and replaces them with one single, streamlined, modern guide that's actually built for the 21st century market. So the most important thing to get here is that this isn't just a simple refresh. The Securities Markets Code 2025 is a complete structural teardown and rebuild of India's securities laws. It's all about creating clarity, boosting efficiency, and building a much stronger foundation for the future. Okay, so this idea of consolidation sounds good, but what does it actually mean in practice? What are the big changes that are going to impact how the market really works? Let's break down the core reforms. The changes are pretty sweeping, to be honest. They give the regulator, SEBI, more power and make its role clearer. They bring in something called proportional enforcement, which is just a way of saying the punishment should actually fit the crime. And on top of that, there's a big boost for investor protection and much clearer timelines and rules for the regulators themselves. This table right here does a great job of showing the before and after. We go from 3 clunky laws to one single code. The regulators board gets bigger, from 9 to 15 members, for better oversight. But honestly, the two biggest game changers are right there at the bottom, in enforcement. Now this is a fundamental shift. The new code decriminalizes minor mistakes, things like filing a form late. Instead of facing the threat of jail time for an honest error, companies will now face civil penalties. This gets rid of the fear of law for legitimate businesses and lets the courts and regulators focus their energy on the really bad stuff, like insider trading and major fraud. And this number, 8 years, really highlights the new focus on predictability. Regulators now have a hard limit of 8 years to start an investigation after something happens. Before this, there was no time limit at all, which created this cloud of uncertainty that could hang over people forever. This brings some much-needed clarity to the whole process. Okay, so we've got a new unified code, but let's get to the real bottom line. Why should you care? Let's look at the real-world impact on the two biggest groups out there, investors and businesses. For investors, this to be a huge win. There's a new ombudsperson system. Think of it as an independent referee to handle complaints properly and on a deadline. And maybe most importantly, any money that's recovered from fraudsters is now meant to go back to the investors who actually lost it. And for businesses, the big benefits are clarity and fairness. One rulebook means less red tape and less risk of getting hit with a massive penalty for a small mistake. And hey, you don't have to take my word for it. This analysis from Bar and Bench really nails it. The end goal here is so much bigger than just cleaning up the law books. It's all about building a market that's more transparent, more efficient, and a place where people from all over the world can feel confident putting their money. So, what is the grand vision here? Where is all of this supposed to be heading? Let's zoom out for a second and look at the big picture behind this massive change.
The goals are definitely ambitious. This new code is designed to make India a much more attractive place for foreign capital, partly by boosting its ease of doing business ranking. It also lines up India's rules with global standards, which makes it way easier for international investors to understand and trust the system. The ultimate vision? A market that is stronger, more modern, and is truly built to protect the investor.
Look, the new code provides a powerful, modern framework. No doubt about it. But its real success is going to come down to how it's put into practice day in and day out. It lays the foundation, for sure, but the real work is just getting started. Which leaves us with this final crucial question. Is this the silver bullet everyone's hoping for? And that's our look at India's new Securities Markets Code. It's a really complex topic, but it has huge implications for the entire economy. And now we want to know what you think. If you found this explainer helpful, do us a favor and hit that like button and share it with someone who might be interested. And of course, subscribe so you don't miss our next deep dive. So, what's your take? Is this new code the right move for India's markets? Is it going to solve the big problems? Let us know what you think in the comments below. We really do read them. Thanks so much for watching.